Hey, it's Neil Rice with Startup University. I'm a business attorney and I've helped over 1,000 people start, build, buy, grow their business. And in this video, I want to talk to you about how to value a Main Street business. Here's the deal. There are millions of small businesses out there. Many of them are owned by baby boomers who are approaching or already at what they'd like to be their retirement years. And this creates a lot of opportunity for those who may be looking to purchase a business that they could grow for the long haul. In this video, I want to talk to you about two things. Number one, what is a Main Street business? So you know exactly the type of business I'm talking about. And number two, how would you go about considering the value of that business if you were going to potentially make an offer to buy it? So let's get into it. First, what is a Main Street business? If you think about the world of business out there and all the different businesses that are out there in the country and all over the world, first, you have these mammoth businesses kind of at the top, these big guys that are usually publicly traded and they're massive. Then you've got businesses kind of sandwiched in the middle. These are big businesses by all accounts, but most people will call these middle market businesses. This isn't your mom and pop Main Street business. It's quite a bit bigger than that, but not so big that you'd say this is a massive publicly traded company. Now, a Main Street business is really kind of the smallest of small businesses. These are businesses that you probably see every day as you're walking down the street or driving to work or wherever you're going, here and there around your community. You're passing these businesses all the time. And usually, if they're a good business, a good Main Street business is profiting significantly. Could be $200,000, $300,000, $400,000 a year to the owner of that company. And these owners are at or near retirement and they're looking for an exit strategy. You might be their ticket to a successful exit. Now, when you think about a business like this, how do you know what it is worth? Normally, a business like this, you got to think about it in terms of its cash flow. And when I say cash flow, what I really mean is how much profit is the owner of this company able to take home at the end of the year? And so, this business is running and it provides services in it or it sells goods. And so there's money coming into the business and then it costs money to run a business. So there are reasonable and necessary business expenses like rent and payroll and goods that you have to buy to be able to run your service, run your business. And so there's money going out. And at the end of the day, there's hopefully profit to the owner. I'm going to call that cash flow for simplicity's sake. So when you think about the cash flow, let's say you have a business that's cash flowing, a Main Street business that's cash flowing $200,000 a year to the owner of that company. Normally what you'll see is a multiple or a price that reflects a multiple of somewhere between 2 and 5 times the cash flow of the company. So this particular company that's making $200,000 a year for the owner is going to be somewhere between $400,000 as a purchase price and $1 million as a purchase price. Well, that's a pretty big spread. So the way you kind of determine whether the multiplier, the 2, 3, 4, or 5 that should apply to this business, whether it's closer to 2 or closer to 5, is by looking at a few key factors. I'm going to give you 2, although there's multiple. I don't have time to go through all of them in this short video. So one of the key factors is how reliable is this $200,000 a year? So if this is like the first year that the business has hit that number, and last year and the year before and the year before that, it was really closer to 125,000, well, then obviously we're not going to use a multiple of 5. We're going to be way closer down here to 2. And in fact, we might even be looking at this number and saying we're not using the right number because we need to see a sustained pattern of making $200,000 a year before we make that our number of profitability for this business or cash flow. So number one is how often or how long, what's the history of this company of making the kind of profit that it's showing? Okay, number 2 would be how important is the actual business owner to the profits of this company? Is it really possible that you could remove the owner by buying the company from them and plug in a manager or even yourself if you're going to be the daily operator? And is it possible to do that without negatively affecting cash flow? So how critical is that particular owner to the success of the business? If you have an owner that's out there like being the primary salesperson for the company, or that's actually doing the thing that makes money for the company that requires some high level of technical expertise that you're not going to be able to find. Those are some signs that you'd say, now we're way down here closer to 2. Or if you see something where you're saying, hey, this is kind of plug and play, we can remove this owner and put a manager in there, and this thing's just going to keep doing what it's doing, then maybe you are closer to 4 or 5 multiple. So these are some basic ways to look at a business and say, what might this Main Street business? Don't take this and try to apply it to a big business. Totally different story with big businesses. But for a Main Street business, you're going to have a multiple between 2 and 5 of the cash flow of that company. Hey, has this been helpful? If so, I want you to check out my course, Startup University. It's designed to give you all the foundational knowledge that you need to start and grow your business well. It'll take you from timidity and uncertainty to confident, bold action. Remember this, there is power, life-changing power in a good business. You've got this. I'm right here with you. Let's go.